We are looking at the Swiss franc here, Swiss franc US dollar cross, and we see this high here. You see the weakness in this high, and then price continued down. Price is really struggling. It's quite volatile, and again we see price trading in these ranges. We see price fall again, retrace to the base of the ranges and fall. Spike up to the base of the range and fall. A very distinct low here, and I just want you to have a look. Let's see here, we're at 126.40, and let's just have a look to see where that low was. If we, you see this low right here, 126.47 on this side, and 39 there, where price failed to hold below. We achieved a double bottom, and price just moved back into consolidation, but the immediate reaction to the failure of that low was right here. The immediate reaction to the failure of the low went from 40 to 30, 26.40 to 27.30, went 90 pips, and it was a real whiplash. So anyone attempting to trade in that during that time of economic report would have had a tough time. We continue to consolidate, and we're making modestly higher highs and higher lows. Price is here now. We're above the central pivot point, and right now we're in the peak of European session. This high down to this low, we're now retracing. We've come through the 38, the 50. Here's the 62% retracement. Here's a level of support and resistance. If we look back in time, resistance, support, support. Let's look back further. Resistance, support, support, resistance, support, support. Now price has, it's trading above this range here, finding support at 2,700. It has rallied. We have now spiked up to the level of resistance and support and the 62% retracement. This here is a 10-day moving average. We are at R1 pivot point, and price has to hold and to hold trading above 27.40. It gets rejected here. Now, if we start trading below 27.20, you see this distinct level right here, 27.20, based on the intraday activity, as each of these levels of support and resistance are very important to the intraday trading activity. Now, if we start moving and trading below 27.20, then the longs are in trouble, and it is very good for the bears, and you could look to potentially trade short somewhere below 27.20. It is trading in a 20 pip range now between 2,700 and 2,720. If it trades and holds below 2,720, then it's good for the shorts. Considering what this candlestick looks like, you may even want to wait for, you probably want to wait for the break of this trend line here. In fact, you want to wait for the break of the trend line, really, because we're still moving up. It's good for the shorts if it trades and holds below 27.20, but now, considering this bounce, we want it to break through this trend line. For the shorts and for the longs, you can trade here. Actually, no, the longs need price to hold and trade above 27.20, and then for confirmation above 27.40. So we're kind of in a no man's land right now. And over the period of the next hour, we moved below the trend line, through the central pivot, and down to the 127% extension. Now look what price does. It moved down below this base level of support, comes all the way back up from a low of 25.76, it comes all the way back up to 26.37. To test this level, if you were watching this at the time, that is actually a good opportunity to go short at 26.35 area. Consolidates at the 127% extension. Looking at this narrow consolidation, looks like it is interested in taking another leg down. And there's our other leg down. Here's our 162% extension, at which point you may consider scaling down on your position trade. It continues further. Still prudent to scale down on your position trade. We continue further now. 2400 the figure. Price holds at 2500 the figure, and then 2400 the figure.